And joining us now as we talk about the markets and the agricultural economy and more as we head to the end of the year, we welcome in our good friend David Widmar, Agricultural Economic Insights. David, good to catch up with you, sir. Merry Christmas, Happy New Year. Thanks for being on Market Talk with me again. Hope you're doing well.
I'm doing very well. Thanks for joining me, Jesse, or having me join, Jesse. This is a lot of fun to wrap up the year and kind of reflect on what's been going on.
Definitely. Well, it's been a year. I think that's the best way to put it. It's been a year, not just for everyone in general, but that goes same goes for agriculture as well. I mean, it started right away at the top of the year, and it's just kind of gone on through the year. Just just to start, let's set this up, David, as we take a look back at the year that has been 2022 in agriculture. I have to think volatility is probably the number one theme. What are your thoughts on that?
Yeah, it definitely seems like we're in one of those periods of history where there's a lot of uncertainty, a lot of volatility, and just this wide range of possible outcomes. And we saw that, um, starting the year off with the Russia invasion of Ukraine. That sort of was a big firework that set off a whole lot of chaos and enthusiasm and concern, and there was a whole lot of emotions depending on what side of some of these trades you were on, or some side of some of these positions you are on. But it's also it created more uncertainty and more question marks about the future as well.
Can you point to maybe one or two items that you felt like were a bigger catalyst, a bigger storyline in the market than maybe some of the others? Because I know there was a lot of things out there. What on your mind? What was maybe the one or two biggest things that really impacted the markets and the ag economy here this year?
Well, I think uh, one market that was significantly impacted um, was the farmland market. This is not one
Mhm.
that's traded every day on the boards like some of our commodities, but we had this combination of, at the beginning of the year, we had career low interest rates, and then we had this commodity price explosion to the upside, and that fueled the profitability in the farm sector. And so we saw farmland values reach really high metrics, really high numbers. Farmland values in Indiana, for example, were up 30%. I'm not sure what 2023 will have in store. It, all indications that I've heard so far say it'll probably be up again, but that 30% mark, we've only seen those once or twice in a career type movement. And so I think that was one of the big changes that we've also seen. I think another, I'm not going to answer your question very good here, Jesse. I'm going to stay away from these corn, soybean, livestock contracts. I'm going to talk about the Federal Reserve and the markets that they have impacted. I think when we look back at this, I believe all of these 75 basis point hikes. I think when you step back, over 400 basis points, 425 basis points of interest rate movements. Um, we have not seen anything like that in the last several decades. You have to go back to the 80s, and in the 80s it was even bigger magnitude, something like 1,000 basis points. But we had a really big change here. I think we tie those things together, they're going to have a long, lingering impact heading into 2023 and beyond.
You brought up farmland values. I want to dive into that just a little bit more as well. I know we just recently got the ISU study out, and I believe that was a little over 11,000 was the average price for an acre of farmland. And I see that, and we hear about some of these record land sales that we got, and you brought up some great points there. I almost wonder with, some of the supply chain concerns that we had, and I believe the ISU study noted this, it seemed like farmers had a little more liquid, assets, more cash on hand because they weren't buying equipment. So instead they bought land. And I wonder if that helped to maybe drive some of these prices higher as well, David.
There's a lot of things going on in the farmland markets, and I think that could definitely be part of it. One of the things that surprised me is just the number of farmland sales that we've seen over the last 18 months. Usually, when you have a lot of farmland on the market, it's going to depress the market, but we've actually seen really high valuations despite a lot of land going to the sale. So I think that helps fill in that narrative that you mentioned there, Jesse, about farmers being able to go and make a lot of purchases. I think when you step back and look at it from a 30,000 foot perspective, we have really high cash rental rates, really high farm profitability, and in general, now the Federal Reserve's changed its outlook a little bit in the last several months, but we've had a low interest rate environment, meaning that buyers of farmland were willing to pay really high prices for those assets to lock in those annual payments. So that relationship between revenue and asset values, in a lot of cases, have been at all-time lows or near all-time lows, and that's what's driving that. I think as we head into 2023, we're gonna have to start to deal with this higher interest rate environment, which could be a bit of a headwind for the farmland markets. But I think thankfully we still have strong commodity price outlooks, and that's going to help hopefully improve the revenue side of the equation and help farmland values in that respect heading into 2023 and beyond.
Thinking on the revenue side, David, can farm income can it stay high into 2023 with higher inflation numbers and more? Are you seeing anything there? Are you doing any work on that as we head into next year?
Well, Jesse, I think the um, I want to reframe what you said just a little bit. I think
Yeah.
farm income in 2022 has been record high despite this high cost structure. And I think when you think about can it remain high, how high is high? Um, we saw some really strong farm income numbers in 2021, 2022. Um, I think these levels have occurred 4 or 5 times since the 1970s. So it's probably unlikely we're going to see that level of farm income in 2023. Now, weather can change, geopolitics can change this. But I want to kind of reframe this, say 2021 and 22 were extremely rare to the high side. We could still have a very favorable year, but it's kind of like, you know, we're moving from a slightly less optimistic outlook. It's still a very positive outlook. We don't want to lose that thread. The other thing that's been really interesting on the farm income story is what we call the economic engine of the farm economy, sort of net farm income less direct payments. That actually did improve significantly heading into 2022. What we've seen is government payments have went from record highs in 2020 sort of to the low end of quote unquote normal ranges. So we've had a pretty significant adjustment there, and we'll see how that continues to play out in the following years.
What are your thoughts as well? I know we've been hearing a lot about exports this year and talking about some of the different, either the slow pace or the normal pace of exports and this and that, and just global supply challenges. And then hear thoughts about, inflation and the economy and the world economy. What's your thoughts with exports? I mean, will we see a slowing of US farm exports, do we think, next year? What does the trend say right now? What are your thoughts there, David?
The cure for high prices is high prices, and unfortunately, that cuts two ways. One cut of it is it encourages producers to produce more, and we get a supply response. The other cut to this is that the high prices limit how much commodity or units of quantity that a corn or soybean international buyer is going to purchase. And so some of this sluggishness in terms of exports is somewhat expected given these high commodity prices. We were kind of noting this at the beginning of the marketing, or excuse me, at the beginning of the growing season back in May, that we're about 1 billion bushels of corn usage off the trend line, and we've been sort of below the trend line for a few years now. So how do we think about this? Well, I think about this as we probably have a long-term story that's been brewing for a few years, but we definitely have a short-term situation that's probably just driven from these high prices. And exports are where that usually shows up. That's usually where we see a lot of adjustment start to take place. We do have some favorable domestic um, considerations, especially around soybean crushing. And so I think that we need to kind of keep an eye on this. We shouldn't be surprised, but we need to make sure that our marketing plans, our farm marketing plans, don't really, um, you know, aren't hinged on this idea of exports going to sort of rebound from the current levels. It's definitely possible, but we should expect this sluggish export expectations. Now, I want to put a little mark in that. I'm still been impressed by China still buying corn. They're not buying as much as they were a year ago, but they're certainly buying more today than they were from 2020 back in time. So it's hard for us as decision makers to frame that. It's not at a record and it's not at normal. How do we describe that? It's above normal. It's way above normal, but it's hard to sort of quantify that middle ground. I think that's where we are in a lot of commodities. We're not seeing record exports, but we're not seeing an utter collapse. So how do we think about that? How do we frame that up? And how do we communicate that? With uncertainty comes a lot of difficulty, and with uncertainty and volatility comes this difficulty of quantifying it and explaining it and communicating it.
Well, and you mentioned China as well. They're having COVID issues here as we wrap up the year, and one has to wonder if that'll have any effect. But I like what you said, try not to get too wrapped up into what's going on with exports. I think that's a big key for producers is to not get too wrapped up in some of these things and more or less look at their bottom line and what is going on their farm, David.
Yeah, most of us are in agriculture because we love to grow the crop or the livestock, and trying to outguess what some of these markets are going to do can get us into a lot of trouble. We sometimes need to just focus on what do we know about our operation, what can I control, and what can I make a decision to lock in. And so there's a lot of moving variables. Hindsight bias is something we want to warn everybody about going into 2023, and that's this idea of we judge the quality of a decision based on what we saw as it unfolded. And so if we start looking back at 2022 or even further back, I might say, oh, I shouldn't have done X or I shouldn't have done Y because of the outcome. Well, we need to move past that and say, did I make a good decision in the moment based on all the information I had available? I think that's what producers should be focusing on heading into 23 is how can I make really good decisions despite the uncertainty that I can be comfortable with regardless of what the final outcome is.
David, let's think about as well the commodities in general. If I have to look back at 2022, I'd say probably the wildest market. I think all three grains had their day, but wheat was probably the wildest market of the year. Would you agree with that or not?
Yeah, I would agree with that. I always um, talk about wheat being a bit of a canary in the coal mine. When things get crazy for wheat to the upside, they tend to get crazy for everything, and when they get really pessimistic for wheat to the downside, they get pessimistic for everything. And what we saw here is after that invasion of Russia invading Ukraine, we saw wheat prices really take off. We saw farm level prices at the USDA level hit an all-time high of 10.50 per bushel in May, and then crop insurance this fall set a all-time high of 8.79. So I think it's going to set the stage for an interesting acreage debate. Early June, we're going to have that U.S. winter wheat and canola seedings report. I don't hear a lot of people talking about that, but I'm sure watching that one as an early indicator for where this corn soybean acreage debate might unfold. Um, I want to add to this. This wheat market kind of got crazy. The futures markets didn't necessarily break, but they didn't function as anybody thought they would when producers were trying to market their commodities last spring when commodity prices were rallying. It got really hard to find a cash price that they could sell their commodity for that day or create a forward contract for. I also think, I'm going to add to this. There are some cash basis in the Western Great Plains that have gone absolutely wild. And it's another example of even the best laid plans, where even if you could have sort of predicted the future outcome, where these commodity prices would have been, being able to make a decision or position to capitalize on that if you're a producer could have been really hard. So our marketing plans have to have some resiliency and they have to have some flexibility and they have to be able to pivot whenever things go a little haywire and it's a little difficult to actually get things locked in.
Looking ahead to 2023, David, you've mentioned quite a few things that I think are still going to be on producers' minds and on the minds of agriculture, obviously, as we begin the new year. What are some other things that stand out to you? Is it maybe the drought concerns? Will that tie into the acreage battle? Fertilizer prices, I know, are still out there. I mean, what are some things that, other things that are on your mind as we head into 2023?
To get things started off, the first thing we're watching is the ending stock situation, not for any specific commodity, but for all commodities around all countries in the world. There is just an overall tight stock situation. Why is this important? Because when we have supply shocks, be it an invasion in Ukraine, a big grain producing part of the world, or maybe a drought that could unfold. That is the backdrop. And that's sort of like a lot of gunpowder sort of stored away. And then we have a small ignition. These markets are going to be very dynamic and very explosive to respond to. This tight ending stock situation is going to continue and maybe even get tighter as we get these final numbers for the current crop and we start to line that up for the next growing season. The second piece we're watching really carefully is this Western drought. You don't have to take a look at the drought monitor too long from a year ago to this year. I'm gonna hit pause real quick. There's always a drought somewhere, and
Hmm.
there's always some amount of drought in the Corn Belt. But what we have seen is this severe drought starting in the western parts of the Great Plains. This is key for where we're raising wheat, some dry land corn, and it's starting to spread its way across the plains and into the far western edges of the Corn Belt. And so this could start to set the stage for some uncertainty and again maybe some upward potential here in these commodity markets if that unfolds. And then, of course, the last piece here that we're watching is just all this geopolitical uncertainty and how that fits in with respect to this high cost structure. Producers know that what makes these margin squeeze periods so difficult is typically commodity prices adjust way faster than our cost of production can. And so when we plant this record expensive crop going into 2023, we want to be very careful because any downward movement in commodity prices could be especially difficult given the high cost structure we have.
Well, David, I know you guys have a lot of great information just to make producers think a little bit. AEI.ag, the free side, the premium side as well. Talk about how folks can learn more if they want to check things out.
Well, of course, check out our website, aei.ag. And if anybody wants to check out a podcast season or two, we have that as well. AEI.ag presents available anywhere you listen to podcasts, but also you can stream it directly from the website at aei.ag. This season, Nothing Borrowed, Nothing Gained digs into where does the money that producers borrow, where does it come from? So, how does the farm financial and credit markets work?
Well, we appreciate the time and the insight as always. AEI.ag is where you can learn more. And David, always a pleasure, sir. I know we'll talk to you again in the new year. Thanks so much. And we'll have you back on soon. Merry Christmas. Happy New Year.
Same to you, Jesse. Thanks so much.